Welcome back to Withum's video series, The Alternative Route. Today we're joined by Eugene Tetlow, co-founder and CEO of V17 Advisors. Eugene, thanks for joining us and celebrating yet another milestone for The Alternative Route as our first three-peat guest, but here to talk about something new.
Yes, thank you. I'm glad to be back and glad to be the first three-peat. Appreciate it.
So this is the first time we've spoken with you about the state of the private equity market, and I'm excited to dive into your takeaways from the second quarter. So a good place to start, always the state of the fundraising. How did PE funds fare in Q2?
Yeah, I mean this is the first time on private equity, and I'm excited too. Let's dive in. To answer the first question, let's start with the amount of capital raised by private equity funds in Q2. This number was 92.3 billion, and this is a very strong number when taken in isolation. It is the second consecutive quarter of growth and is significantly higher than Q4 of 2024, which saw only $48.3 billion raised. If we look even further back, Q2 was the fourth best quarter for total funds raised since the beginning of 2021. So a very positive number and a very, very kind of positive quarter in terms of capital raised in the private equity space.
Well, that's positive. You said if you take it in isolation. Can you expand what you mean by that?
Yeah, absolutely. So, the 92.3 billion raised is very strong, but the total number of funds that raised this money declined and declined to just 67. This is the third worst quarter since the beginning of 2021 and nearly half of Q4 2023, where the number of funds that had a successful close was 123.
That's interesting. So what do you think that means?
So in essence, what it means is that money is moving into the more established private equity funds and firms, and it's moving away from the middle market and emerging managers. So the average fund size in Q2 with a close was 1.38 billion, and this is the highest figure for any quarter since at least 2020. So it's not a good sign for emerging private equity funds or middle market private equity funds. But one thing to note is that Thorma Bravo alone accounted for one third of the total assets raised in Q2, so that did skew the numbers a little bit.
Hmm. So I guess maybe from there, let's move on to the deal value. What picture did Q2's numbers tell us about that?
So good news. Deal value remains strong at 227.7 billion. That number is down on Q1 by about 18%, but year on year it's up about 11%. We also interestingly saw a lot of mega deals, including Blackstone's $11.5 billion acquisition of TXNM Energy and Thorma Bravo's 10.6 carve out of Boeing's digital solution unit. So deal activity is good, deal value is good, remains strong, but there were some mega deals in there as well.
Hmm. And what about the take it private activity?
Interestingly, take private activity fell 41% quarter on quarter in value as sponsors paused amid rising public equity prices and general volatile financing costs. Add-on deals surged to 75.9% of all buyouts, and this shows that GPs continue to prioritize scale and operational synergy in the current high-rate world.
That's interesting. So can we talk a little bit about exits? What have you been seeing there from the data?
Nothing great, unfortunately. Exit value dropped 46% compared to Q1 and is down to 118.5 billion. And the exit count fell to 314, down 25% on Q1 and the lowest in over a year. An interesting side note is that sponsor-to-sponsor exits held relatively firm, and this was led by Brookfield's 9 billion acquisition of Colonial Pipeline.
We started with some positive stats. I think we worked our way negative. What do you think we should be looking for in Q3?
We should have done it the other way around. So I guess Q2 reaffirmed the growing concentration of capital among brand name GPs. The average fund size increased, exits slowed, but continuation funds and strategic mega deals kept activity afloat. Whilst deal flow was steady, the real action favoured the upper end of the market. As we turn our attention to Q3, we'll be looking at whether middle market funds, emerging managers, can regain LP confidence. We'll also be looking at whether continuation funds can keep absorbing exit pressure. And finally, we didn't touch upon tariffs in the private equity space today, but we'll be keeping a close eye on how tariff volatility impacts sector strategies and carve-out opportunities. Will we see a return to a more normal market or just a continuing investment in kind of tariff neutral opportunities.
Yeah, that'll certainly be interesting to see. Thank you for joining me today with another insightful chat, and stay tuned for our next episode of The Alternative Route.
Thank you.